Hey, in this video, once again, we're going to be looking at the charts because if you're a stock and or options trader, looking at the charts, the stock charts, trying to figure out which way stock's going to go is very important to your long-term profitability as an options trader. So for the last 30 years, I've been looking at the charts, trying to help me gauge when to get in and out of a trade. So if you want to see what I'm seeing and want to see what's been going on in the market, we're going to look at some indexes, some individual stocks, and I'll show you what I've been seeing. So if you want to look at some of this stuff with me, then sit back and relax, and let's go. All right, everyone. Lee Lowell here from smartoptionseller.com. As we typically do, we look at the charts. So we're going to bring it right up here, and we go right into the S&P 500, represented by the SPY, the SPY, which is the exchange traded fund for the S&P 500. It's probably the most widely traded instrument out there. So we always like to look at the general market first, and then we'll deep dive into some individual stocks. And as an options trader, it's super, super important to have an idea of where the stock may or may not be headed, because really the stock price is going to be the ultimate determinant of how your option trade performs. So we really need to have a good idea where the stock is going. So I'm going to show you some charts here. We're going to figure out, what may be happening next week. There's a lot of news out there, so we're going to go over that as well. But let's take a look at the S&P 500, and we look at the SPY here. And what you see in front of you is a daily bar chart. This is what I use. This spans back about 2 years worth in time, so we got 2 years worth of information here. The only things that I have in my chart are 3 indicators here. I've got the 20-day, 50-day, and 200-day simple moving averages. And down here I have the 14-day RSI, which is an overbought, oversold indicator. I use the 80 level and 20 level as my overbought and oversold areas. People ask me, what are my settings? What do I use? And that's all I use. Try to keep it pretty simple. So let's talk about what's been going on with the S&P 500 first, because it's the broadest measure of the market as a whole. Now, you're going to see some of these patterns and some of these, I had draw these lines on the charts to help me gauge what I'm seeing here. Some of the best things you can do is just try to figure out which way a market or stock is trending, because if a stock's in a trend, it's going to stay in that trend until something pushes it in the other direction. And we all know 2022 was a horrible year for stocks. Okay, here's the beginning of 2022. Just had a down move basically the whole year until sometime in October, we started to go up a little bit. So I want to draw some other lines here. I'm going to take this off for now. And then, we can redraw them to show you what we're looking at. But we always want to try to get a gauge of the general direction of the stock or index you're looking at. So we use trend lines here to kind of give us what I like to use as a channel. Okay, so you can see the S&P 500 has been in this channel since, mid-October of 2022. And it's been bouncing around in this thing. And it's been real tight of late, the last 2 months or so. You can see it's just a lot of sideways trading. Been very frustrating trying to pick a side, bullish or bearish, and it just keeps bouncing back and forth in this real tight range here. And we can even dial in even a little bit tighter. You got, probably around between 415 to 20 on the SPY on the upside, and on the downside it's, maybe 405 to 410. So it's been in this real tight range for a while, but you can see it started to poke out on Thursday and Friday this last week. Now, what we also have is let's draw some other lines here. Let me take these away. I don't want to put too many lines in here to confuse anybody. But what's sort of been happening here is we definitely have a market that's in an uptrend, but it also has some resistance. So let's draw the resistance here. We got this nice little uptrend, but the resistance is right under around 420 or so on the SPY. So we're going to try to get this as straight as I can, a little manual labor. So we have the nice uptrending, but we also have this area of resistance that it's been really hard for the market to get through, which is around 420 on the SPY. And it got through it on a little bit on Thursday, and then got above it on Friday, but it closed below the resistance on Friday. If you look at this one bar here, each bar is 1 day's worth of trading. There's a little teeny dash mark on the right side of the bar, which shows us where it closed for the day. The closing prices are very important because it can give momentum to the following day. So we closed just below that level, which is probably around 418, 419 or so. popped above 420. But what we really want to see for us bulls out there is we really want to see this thing get above 420 and keep going higher. But what's happening out there, at least in the U.S., we have this debt ceiling standoff, this debt ceiling crisis where it's been projected that the U.S. could really, run out of money by June 1st, and we need to raise that borrowing limit. And so the U.S. government's trying to figure out how to and how much, when and how much to raise the borrowing limit so we can pay our bills and keep our credit rating. We don't want to default on any of our loans or anything like that. So the next 2 weeks are going to be very critical, not even next 2 weeks, next week and a half. It's going to be very critical in the U.S. about raising this debt limit. So we could have some selling come in since we didn't really stay above this resistance line. The futures market opens up at 6 p.m. Eastern time, Sunday evenings. And, we'll see how the market reacts. And that's the E-mini S&P 500 futures, the NASDAQ E-mini futures. So I'm kind of thinking that, we may see a little bit of sell-off in the early going of the market as it opens at 6 p.m. Eastern tonight, because, there's still some talk behind the scenes this weekend. It's going to spill over into this week and possibly next week. And I'll bring up the E-mini futures. This is let me bring this up here. So these are the June 2023. These are the front month futures contract for the E-mini futures. Okay, it looks just like the SPY. It's just basically the same instrument. So you can really see we have this top right around here. We can, draw a line as well. So, right around here or so, we've got a little resistance, and we want to see the market get above that, convincingly get above this area and convincingly move higher. But we may have some sell-off this week if the U.S. can't get its act together and, raise this debt ceiling that everyone's been talking about. So be prepared for possible selling this week. If, unless tomorrow morning we wake up and there's been an agreement on to raise the debt ceiling, if an agreement comes to fruition, then we will definitely see the market continue higher and hopefully start to make moves towards the all-time highs around $480, which was hit right back at the end of 2021, early 2022. So if we have an agreement, we're going to see the market, the general market, go higher, and most individual stocks will follow along with it. We can look at the NASDAQ. We look at the triple Qs for that. And that's been the strongest market out of the three main indexes, which is the S&P 500, the NASDAQ, and the Dow Industrial. So you can see it's been in this nice sort of uptrending channel here. It's been going higher. It's sort of starting to get a little vertical here. So the NASDAQ's been pretty strong and, was floating along the bottom edge of the trend line here, but then just started to move higher. So we'll see what happens this week. The Dow is probably the laggard of the three. Here's the Dow Jones using the DIA. Here's the symbol up here in the top left corner, DIA. So the Dow's, it has this resistance. Now, these are a lot of old lines that I have on the chart. You can see down, up, and now we have this resistance here, probably around 345 or so, maybe a little bit lower than that. You can see that the Dow needs to get above that area. So let's take a look at some individual stocks now, see what's happening here, and I'll keep this open big. We'll start with Apple. We look at some of the bigger stocks, the stocks that are really driving the market. Now, you may see, this looks a little confusing here, but there's a lot of lines in this chart. These are channels that have been on the charts for a while, because I used to make these videos all the time. We've got this sort of W pattern that you can see here, and we've got possible triple top here. I've been talking about Apple the last few weeks, and we know that area between 175 and 180 for Apple is that real resistance level going back to April or so of 2022, right up here. A W pattern is typically a bullish pattern. Once the current pricing could get above the middle area here, it should continue higher. We can move this down a little so we can see. But at the same time, we have this triple top kind of lurking here. So there's going to be a battle right here between 175 and 180 to see who's going to win that. I think in the very short term, we may see some selling come in because of this debt ceiling thing until, June 1st is the deadline that's been drawn for this debt ceiling. So we may get a little selling off here, maybe back down to some of the moving average lines. Don't know yet. We'll see. But definitely 175 to 180 is that resistance area. If it can get through there, then it looks like Apple's going to go on to all-time new highs. So keep an eye on Apple. Look at the big stocks that are really driving the market. This is Microsoft. Okay, you can see how strong Microsoft's been in this channel here, now kind of hugging along the top edge of the channel. It's not completely overbought yet, but it's definitely starting to make some new highs. I think Microsoft wants to make a move for the all-time highs that came around the end of 2021. So Microsoft's been looking good, moving higher. That's been driving the market. Let's look at Amazon. Let's look at Amazon real quick. Amazon starting to, it made the lows right around the beginning of the year, bounced off. We had this line drawn a long time ago, so it bounced off that line, bouncing within the channel. But as you can see, it's popped above the upper edge of the channel here, which could mean that it may be in for some very short-term selling, just to bring it back to the middle a little bit, just to get this RSI back down a little bit. But just because a stock sells off doesn't mean that's the end of the bull market. It just means that some of the froth needs to get taken out a little bit, pop a little, take that pin and pop a little air out of it, have it pull back a little bit, get it more into the middle here, and then it can continue on with its upwards momentum. A lot of people think, oh, it's making a top, the stock's going down for good now. No, that's just a pause in the uptrend. You can see it's in this uptrend, so it will stay in that uptrend until something comes along and pushes it into another downtrend, if that ever occurs. So any pullbacks at this point should be seen more of a higher probability trade to get long. If it pulls all the way back to the bottom edge of a channel, it doesn't matter whether it's this stock or any other stock. If a stock's in an uptrend and it starts to pull back towards the bottom edge of the channel, that could be your high probability trade for the next bullish action. So a lot of times stocks will either fall to one of their moving average lines or to the bottom edge of the channel and then start to turn up again. And if and when it turns up again, that's your signal to get into a bullish trade. Okay, let's look at AMD, one of my favorites. It's also, we had gotten into a position in our newsletters. Put selling is more of a bullishly oriented type of trades. We sell put options. That's what we do at the Smart Option Seller. And we had talked a couple weeks ago about here, it was making the bottom, right at the bottom edge of the channel. And sure enough, look at the nice bounce that it has. So let's kind of redraw these lines here and just get a fresh update. I'll take this off here, and you can see a lot of 2022 was in this downtrend. So let's draw some new trend lines here. And what you do is you connect some of the bottoms. We'll extend it out a little bit more. Connect some of the tops. All right, so you can see that AMD is on its way towards the upper edge of this nice little channel here. So when it gets up here, doesn't mean the bull market's open. It just means it may have a little pause, get the RSI back down towards the middle a little bit. So it could pull back, halfway maybe to the mid 90s. And then as long as things are still good in the general market, AMD will continue back up. So, we got in down here a little bit for the move up, and now we'll see if it comes up to touch the top edge or if it pulls back a little first and then continues on. So these are the kinds of things you want to look for when you're looking at these markets. Let's look at Pepsi, because I think I had this. Yep, I had this on the charts from the last couple of weeks. So Pepsi has been in this nice long uptrending channel, bouncing perfectly in the channel. It's been getting a little overbought here. We talked about this the last 2 weeks or so. It's gotten above the top edge of the channel here, and finally we got some selling come in. We can see that the RSI had gotten overbought, and now it's starting to pull back a little. Does that mean we have a new bear market in Pepsi? Absolutely not. It just means some of the froth is being taken out. Where will the pullback end? It may just end right here in the 20-day moving average where it's at right now, or it could pull back a little bit more to the 50-day moving average if we get this debt ceiling thing kind of drags out the next 2 weeks. We could get a little bit more selling, but for a stock like Pepsi, any kind of pullback is a good time to buy. Maybe you nibble a little here, you nibble a little here if it starts to pull back here, and if it starts to pull back all the way down here, then you wait to see if it starts to curl up again, and that would be your real high probability trade if it starts to move higher from down at these levels. All right, so you want to use these channels to your advantage. What other stocks do we like to look at? Let's look at Netflix. We look at some of the biggies because these are the ones that drive the market and make the big moves. So now for Netflix, we had drawn this congestion pattern. The congestion pattern is a triangle pattern. Now these are lines that I drew. They don't come automatically on the chart. So you have to look for these patterns. So the congestion pattern is when the stock starts to get real tight on its daily ranges until it forms an apex here, and then it usually blasts higher or lower out of the end of the triangle. And we can see Netflix on Thursday this week had a nice move higher, went up like $30 a share. It's a big move. And so at this point, it should continue on in the same direction from how it breaks out. So if it broke out to the upside, that momentum should carry it. All else being equal, for this debt ceiling thing could knock everything lower. But if the debt ceiling was, not an issue, then this momentum should keep driving it higher. Stocks like Nvidia just been massively moving higher. I mean, this has been a great play as well. It's almost recovered all of the down move from 2022. You can see all the way down, and now it's retraced almost all the way back up. What an incredible move for Nvidia. For those of you who have been long Nvidia, congratulations. It's been a great trade. You can see, we've got this continuation of this channel higher. So Nvidia has been making some nice moves there. What other stocks can I show you? What I want to do here is just want to show you some patterns that can help you understand, how and why stocks make certain moves that they do. Let's see what else we have. Let's look at Nike. We like to concentrate on these high quality name brand companies, the stalwarts in their sectors. Those are the kind of stocks you want to concentrate on. Now you can see Nike right here. Here's the 200-day moving average, this line right here. Now this is what we call the granddaddy of moving averages. Nike coming back to touch this area could be an area of support. All right. What happened this week? Foot Locker had their earnings the other day and just completely bombed. And I'll show you the chart of Foot Locker. So it kind of pulled down other companies within that same sector. Nike, we're going to look at Dick's Sporting Goods as well. So they're falling in sympathy. Doesn't mean that they're horrible companies. It just means a lot of investors think, well, it's in the same category. We should sell those too. So let's bring up Foot Locker real quick, and then we'll go back to Nike. So here's Foot Locker. And then, on Friday, it had this horrible $10 drop right here from $40 a share all the way down to $30 a share. That's a big move, right? And so it pulls down these other companies along with it. Let's go back to Nike real quick. So, Nike's a great company. I mean, everybody knows the Nike brand. So this pullback to the 200-day moving average, could it be, a potential buy area? Sure, it possibly could. Want to see what happens this week with this debt ceiling standoff? It could certainly pop from here, and this could be one of your higher probability trades. And if it keeps dropping, well, then your next area of support is probably the lows here back in October, around low $80 a share. But I have to believe that the 200-day moving average will probably hold it there, but we'll see. Dick's Sporting Goods is another stock that got hit on Friday as well, in sympathy with Foot Locker. You can see Dick's is starting to move lower here. We have a position in Dick's in our spreads newsletter. We sell put option credit spreads, which is also a bullishly oriented type of trade. So, Dick's was in this nice uptrend too, and now it's started to move. It's falling outside of the trend line, which means, okay, maybe a new direction is starting to form for Dick's, but we have the 200-day moving average waiting down here to potentially catch it and keep it in this general uptrend. Or maybe it's starting a new downtrend. We just don't know yet. We want to see how it reacts this week to the news and see how it reacts to the moving average here. All right, so let's see what other stocks we have. Anything of note? Disney we like to look at, and we'll look at Tesla too. So Disney was also had this congestion pattern here and started to go a little bit more sideways and then just kind of fell out of the bed here, getting back down towards $90 a share. I mean, we all know Disney. We all know the company, the happiest place on earth. I lived in Orlando for 40 years. I know the reach that Disney has. It's a great company, long-term hold. Let's look at the monthly chart of Disney, and see, and let me move myself over here for a second. Monthly chart of Disney. I mean, long run, it's a long-term hold, but you can see it's starting to fall back towards the $80 per share area, which is big support. This was the COVID low, $80, and the last time it was at $80 was sometime in 2013, 2014. So if you're looking to get long on Disney at a long-term support area, $80, and it also coincides with the uptrending 200-day moving average. I'd say in the low 80s, if you want to nibble a little bit, buy a few shares if it even gets that far down. Could be a good support area, good bounce for, long-term future hold. So keep an eye on Disney in the next couple weeks or so. Could be worth taking a look at. Tesla, we look at Tesla too. Tesla's just, I say this every week. Tesla's kind of hard to trade because it's very erratic, very volatile, but it has been trading in this long-term downtrending market, and it sort of has this bull flag. I talked about the bull flag a couple weeks ago. Bull flag is just it has a nice move up and then a sideways, slightly downwards, and then it blasts through the upper part of this channel. But it's also contained within this longer downtrend. So I don't think Tesla's going to see any long-term bullish action unless it gets above this long-term downtrending line. So it's got to get above the 200s before it could really be taken seriously to the upside again. So keep an eye on Tesla, but it is one of the big market movers. What else we have? PayPal we talked about recently as well. PayPal finally got knocked out of the long sideways channel that it was in, falling down through, and then once it falls through, it can typically keep going for a little bit until it finds some support. So $60 maybe support for the time being, but who knows? PayPal, I don't have any opinions one way or the other. I'm letting the chart show me what it wants to show me and then go from there. Let's see what else we have. McDonald's, always a quality company, doing well long term. You see from bottom left to top right, stock just keeps going up. Yeah, there's some pullbacks along the way, so you got to pick your spots, but McDonald's looking good. Coca-Cola, another stalwart. Pepsi's chart looks better than Coca-Cola's. Coca-Cola's just been kind of floundering, sideways action, but a great long-term hold, good dividend-paying company, Coca-Cola. And let me move this chart over here, the name over there. Anything else that's really worthy? What do we want to talk about? Healthcare stocks. Let me go through my list. I think we've hit a good smattering of stocks here. Cisco was a company that just had their earnings out the other day. I love Cisco as a company, kind of sideways action, but finding support on the 200-day moving average here and had a nice little up move after its earnings. So Cisco could possibly keep going, and we'll see what that one does over the next couple weeks. Oracle doing well. Is Oracle making close to all-time highs? Let's take a look at the long-term chart on Oracle monthly. Yeah, getting close to that all-time high that was hit sometime in end of 2021. So Oracle looking good, moving up. Definitely in an uptrend. Procter & Gamble, not much happening there. Oh, let's take a look at Walmart. I love Walmart as a company. Walmart doing all right. Just kind of trading sideways here. Good long-term hold for Walmart. But, as a short-term trade, it's just trading sideways. For me, it's more the long-term. Do I want to hold on to these companies for long-term? Right now, the chart's not really telling me anything like some of the other charts I looked at. So we look at the patterns, look at the trend lines, look at the channels, look at the, the congestion patterns, whatever. Those are the companies, or those are the stocks where, when we decide to make a trade, we look at those patterns. Walmart for us, there's not really much happening here, so there's not much to make a trade on that. And I think that's about it. Oh, let's take a quick look at Google. I haven't looked at Google lately now. So Google, another, it's kind of like, was it Pepsi that was getting a little bit overbought? So Google is in this channel. So it's definitely getting overbought here. Look at the RSI near the highs here. getting a little frothy up here. So I think if anything for Google, the next move, especially if these debt ceiling talks aren't doing so well, Google will probably get kind of taken down to the downside. Will probably come back inside the channel here, maybe to the uptrending 20-day or 50-day. So a pullback in Google could be that next buying area, that higher probability trade you're looking for. You're always looking for some kind of catalyst or higher probability scenario for your next trade. So if Google pulls back here to this area, could be the next leg before, that support before the next leg higher. So these are the kind of things you want to look over. All right. So that's all for the charts. Once again, we'll go quickly back to the SPY. Once again, we're in this kind of, pattern here. Could get hit back down a little bit. We'll see how the market opens at 6 p.m. on Sunday. And, that's about it. So let's go to our website real quick, smartoptionseller.com. We sell put options here. Please get our free Put Selling Basics ebook. Go to our website, smartoptionseller.com. Click on the Put Selling Basics link right here. Scroll down. You can read a little bit about it. Put your name and email address here. We will send you an email with a link to download the free copy. If you want to learn a little bit more about what else we do, our services tab here, we have our 2 newsletters and our one-on-one coaching. So if you're interested in take your trading to the next level, or if you need some help getting to that next level, consider one of our coaching sessions. All right. So on the screen here, I'm going to put up one of our videos about how to sell put options and what put selling is all about. So if you're interested in that, click on that and you can watch the next video. All right. That's all from me today. I hope everyone has a great rest of your weekend and a great trading week ahead. This is Lee Lowell signing off.